back. Well, as promised, we have the CEO and MD of Welspun Living, Ms. Dipali Goenka, joining us on the show to talk to us about earnings as well as sector. Hi, Dipali. Good to be speaking with you.
Hi. Same
Well,
here too.
Well, before I come to your numbers, Dipali, I wanted to get a sense in terms of the budget announcements that were made yesterday, because there was a bit of a fillip given to the textile industry as well with the kind of allocation increase that we have seen. Of course, there were PLI schemes and other schemes already at play. Were you happy with the announcements given it was a statement of account, or you had expected more?
No, I think it was I think overarching, let me just give you a perspective of the budget. I think they focused on the long term rather than the interim, and focused on the capital and expenditure and the fiscal prudence, focusing on the farmers, the women, youth, and the poor. And I feel overarching, it is a fabulous way of looking at the economy towards a journey towards 5 trillion. And as far as textile is, looked at, I think there are great things that have been announced for the PLI as well, in the terms of the cost, in the terms of the, which is completely inverted now, for the man-made fibers as well. So yeah, there are a couple of things that are going on, but overall, a good sense check, quite positive for all of us.
Well, yes, quite positive, and it was very prudent, as you said. There was no, giveaways, given it was ahead of the election kind of budget. But coming to your own numbers, while on a year-on-year basis, there's a good growth. Sequentially, I see that there has been a bit of a dip when it comes to the operating performance, revenue, EBITDA, etc. I don't believe it was a seasonally weak quarter, is it? Or what led to the weakness in Q3?
There was no weakness, absolutely. And we've actually given a big growth this time. And, usually we don't compare it on quarter, because quarter 2 usually is a complete big spike. And quarter 3, we have actually year on year shown a phenomenal growth, I would say that. And our EBITDAs have also been all-time high. So definitely not a weak quarter at that. And we continue to be on the numbers that we're talking about as well. So, quarter 3 usually has been the quarter for the last quarter for most of the retailers across the globe, and hence there are a lot of stock corrections. Despite that, it has been a very decent quarter for us.
Yeah, that does explain the weakness, that seasonal weakness that we saw in Q3 per se versus Q2. But you had guided for 10 to 12% kind of growth in FY24 with a margin profile of 15%. Are you on track for that? Because there were these Red Sea disruptions which had played a bit of a spoil sport and continue to do so now as well with respect to exports.
So let me tell you, we've revised the numbers upwards to 15% growth for the entire year. And the Red Sea, and I'll tell you one thing, the world post-COVID has not been the same. The disruptions will happen, the geopolitical issues will happen. It is about what we do as a corporate. I must tell you, Red Sea is something that we have been closely watching. However, there's no significant impact that will come in the terms of our servicing or even in the terms of quarter 4 or way forward at the moment. We seem in control there.
Point taken. And before I let you go, I want a sense on your flooring business, because of course on a low base, it has shown quite a strong growth of 46% on a year-on-year basis. What do you see the growth trajectory for this one? What are the levers? What is the stuff that we should watch out for when it comes to flooring?
So flooring is on a track of growth, and these are our emerging businesses like advanced textile, retail, and flooring. They actually significantly have contributed around 35%, of the growth, and 21% growth year on year, and of course, flooring at around 46%. So the opportunity here is both. It is going to be, global as well, and India as well. When I talk about the global, the opportunity is the China plus one. And a lot of partnerships in the terms of, opportunities there, specialized retailers, home improvements. GCC, again, we have always seen that there's a lot of growth happening, so a lot of project-driven opportunities there. And India is going to be a very great opportunity in the terms of residential, hospitality, and institutions as well. So definitely a great opportunity out there for us.
And you talked about how the last quarter of the calendar year is, of course, a bit of a weak quarter due to the stocking changes that you talked about. But what about the Q1? Because this is the time when you start, getting orders perhaps for the full year. How has the traction been on the order booking front? Because the headlines coming in from US and Europe still point to a bit of weakness when it comes to the retail sector.
I would say US continues to be resilient. We have seen the offtake in the terms of, inflation's down 3.4%, GDP is 3.3%, and the retail has grown in December by around 3.6%. So these numbers are for real. And Fed's been dropped. I mean, Fed rates have, they're cutting rates as well. So that actually has laid stress on discretionary as well, which wasn't there earlier. So definitely there's a great opportunity. UK, Europe are a little slow, but we have reported double-digit figures in all geographies here, including India, which actually also is a huge opportunity for us. And we have shown a 20% growth year on year here too.
Okay, Dipali, on that optimistic note, we let you go. Thanks so much for making time and speaking with us today.
Thank you so much.